In the last video, we compared employees and entrepreneurs when it comes to money and risk. And we saw that entrepreneurship isn't always the golden ticket people imagine. But money is only half the story. Because when people dream about escaping the 9-to-5, they're usually chasing something bigger, freedom. And when the rich talk about getting ahead, they don't talk about salaries, they talk about tax advantages and long-term strategy. So in this video, we're going to break down 3 things. 1. The real difference in freedom between employees and entrepreneurs. 2. How taxes can be a secret weapon for entrepreneurs, and why employees don't have the same options. 3. And finally, the long-term game. Who really comes out on top when you zoom out over 10, 20, even 30 years? We've talked about money, but let's be real. Money is only half the story. What about freedom? Most people imagine it like this. Employees, stuck in a cubicle from 9 to 5. Entrepreneurs, living life on their own terms, working whenever they want. But the truth? It's not that simple. Both employees and entrepreneurs can feel trapped. Let's start with the employee. They have a fixed schedule, rules, deadlines, and of course, a boss. But here's the upside. Once the workday ends, they can close their laptop and walk away. Now, the entrepreneur. On paper, they have freedom. They decide when to work, how to run the business, what direction to take. But in reality, they often work longer hours. They take calls at night. They spend weekends fixing problems. An entrepreneur wakes up every morning with one job: fixing problems. True freedom for entrepreneurs usually comes years later, once the business is stable and there's a team in place. At the start, it's not freedom at all. It's total responsibility. And here's another twist. With remote work today, even employees have a lot more flexibility. Many can work from home, or even from another country. That's real convenience. But being an employee also ties you to your company's culture and management style. If you've got a boss who's micromanaging every single minute, checking every task, it can be frustrating, even suffocating. Entrepreneurs don't have a boss breathing down their neck. That's true. But instead, they're babysitting their clients. Customers calling at midnight because an order didn't arrive on time. So, freedom? Honestly, not guaranteed for either side. Another major difference is taxation. When it comes to taxation, employees and entrepreneurs live in completely different worlds. An employee earns a salary, pays taxes automatically through payroll, and has very little control over how much tax they pay each year. No deductions for fun things, no clever strategies. The money is gone before they even see it. Entrepreneurs, on the other hand, have options. The rich dad, poor dad philosophy emphasizes this distinction. Rich people focus on assets, investments, cash flow that they control, rather than just exchanging time for money. Taxes are not a punishment. They are a lever. By structuring income smartly, entrepreneurs can legally reduce their taxable income, reinvest profits, and grow wealth faster than employees who have little choice over their deductions. Let's break this down. Suppose Kevin owns a restaurant that brings in $200,000 a year. On paper, that seems huge compared to a salaried employee making the same amount. But Kevin has expenses: payroll, rent, supplies, insurance, marketing, all fully deductible. That means the taxable income shrinks dramatically. Instead of paying 30% of $200,000, maybe they pay 30% of $50,000 or $70,000. That's tens of thousands saved legally, which they can reinvest in the business or put into personal investments. Here's another tip. Entrepreneurs can pay themselves a salary that balances living expenses, with cash left in the business to grow. Want to take home $70,000 and leave $50,000 in the company for reinvestment? Totally possible. Employees don't get that choice. They're limited to the salary the company pays. This is exactly what Rich Dad Poor Dad calls making your money work for you. By controlling cash flow inside the business, the entrepreneur turns expenses into tools for growth, while legally minimizing taxes. Even things like buying a car, equipment, or software for the business can be partially deductible, which reduces taxable income further. Employees can't do that. If they buy a car to go to work, it's after-tax dollars. One of the biggest advantages? The rich don't just earn more. They structure their lives so that taxes work in their favor. Entrepreneurs have the flexibility to choose what counts as personal income and what stays in the business. They can reinvest, expand, defer taxes strategically, giving them a significant advantage over employees. Even in a bad year, a clever entrepreneur can reduce taxable income dramatically by planning expenses ahead of time. Meanwhile, employees, no matter how skilled, have little to no control. Their paycheck is taxed at source, and deductions are limited to things like mortgage interest or charitable contributions. The lesson is clear. Taxation isn't just about paying less. It's about having options, leveraging business structures, and making money work for you, not just the IRS. So, if you want to keep more of your earnings legally, entrepreneurship gives you levers employees rarely see. Control your salary, deduct your expenses, reinvest profits, and use retirement plans strategically. This is exactly how the rich think differently about money, income, and taxes. In the words of Rich Dad Poor Dad, the rich don't work for money. They make money work for them. And taxation is one of the most powerful tools to do exactly that. That's a huge difference. But with that advantage comes complexity. Entrepreneurs need accountants, careful planning, and discipline to manage their finances. For an employee, it's simpler. Taxes are handled for them, and they don't carry that extra burden. So far, we've compared money, we've talked about freedom. But now, let's zoom out and think about the long term. The truth is, both employees and entrepreneurs can be successful. Take the employee path. An employee can build a steady career, climb the ladder, save for retirement, and enjoy stability. Some of the most successful employees start with the same company, and over the years, rise from entry-level to high management positions, with huge salaries. Look at top directors in fields like IT, public relations, marketing, human resources, finance. Salaries can go well above $140,000 a year, and that's before bonuses and incentives. So yes, you can absolutely be an employee and still achieve serious financial success. Now let's flip it. Entrepreneurship. Here, the potential is exponential. You can build something bigger than yourself, create assets, maybe even sell a company for millions. But the hardest part? Surviving the business cycle. You start with investment, then you fight to break even. Hopefully, you move into the green. And only then can you dream of exponential growth. But here's the truth. Many businesses get stuck at one of those stages and never move forward. There's even a psychological trap, the Dunning-Kruger Effect. It's when people with low ability in a task overestimate their skills. They dive into business with sky-high confidence, but without the right knowledge, they make bad decisions. They don't even realize their mistakes. At first, they're full of energy. Then slowly, reality hits. If they have resilience, they might push through and reach the next level. If not, they find themselves stuck, or worse, completely trapped. But here's the key. Neither path is bulletproof. Employees can fail too. You can get stuck in a job you hate, never progress, and feel miserable for decades. Entrepreneurs can pour years into their business and still watch it collapse. The bottom line? There's no guaranteed winner. And here's the most important question. What happens if it doesn't work? If an employee loses their job, they can polish their resume and apply somewhere else. The safety net is stronger, and while the transition might be stressful, they don't usually lose money out of pocket. For an entrepreneur, failure is much heavier. Imagine paying employees, signing contracts, renting space, investing in marketing, and then the business shuts down. The bills don't stop. You can walk away from a job, but you can't walk away from debt or obligations that come with a business. That's why entrepreneurship feels like a gamble. High risk, high reward. So which is better, a 9-to-5 or entrepreneurship? The truth is, neither one is universally better. The 9-to-5 gives stability, predictable income, and benefits like health insurance, vacation days, retirement contributions. For many people, That safety and balance are exactly what they want. Entrepreneurship gives autonomy, meaning, and the chance to create something truly yours. It can make you happier, more fulfilled, and in the long run, potentially wealthier. But it comes with sacrifices most people don't see. At the end of the day, this is not about which path is superior. It's about which path is right for you. If you crave security and predictability, a 9-to-5 may suit you perfectly. If you're willing to take risks, sacrifice stability, and put everything on the line for a vision, entrepreneurship may be the road to freedom. What matters most is knowing yourself. Not everyone is built to be an entrepreneur, and not everyone is happy in a 9-to-5. Both paths can lead to success. Both can lead to failure. The real difference comes from what you value, what you're willing to risk, and how you define success. So before you chase that Lamborghini dream, or dismiss the safety of a stable job, ask yourself the real question. What do you want your life to look like? Day after day, year after year. Because in the end, it's not about 9-to-5 versus entrepreneurship. It's about building a life that actually works for you.